Hi, this is David Reyes of Reyes Financial Architecture. I felt it was a good time to do a market update. Haven't done one in a while. The reason being the market's gone pretty much straight up since January. We're up about 14%. We were in the Dow Jones Industrials. What's happened over the last 3 weeks is pretty startling, but actually normal. The Dow is down 1,332 points in 3 weeks since April 23rd, which is a 5% move, which is pretty significant. Although last year we had two 10% corrections and a 20% decline. So the market is back to being very volatile again after having the first quarter being very muted. What's amazing also is that we've actually gone nowhere since January 2018. In fact, if you invested in the Dow in January, through today, you're actually down 0.6%. If you just bought little old bonds, long-term treasury bonds, you're up over 5%. And the reason I bring that up is because markets like this, you got to be careful. We're basically almost approaching a year and a half going nowhere with a lot of volatility. So you better have a plan to make sure that you mitigate that volatility. Also, as many of you have been listening and watching the news, China has been a big issue. We just now increased the tariffs against China, which has been a big deal. But probably the biggest pressure that's been on the market is earnings. And a lot of times news can really negatively impact or hide what's really happening underneath the surface. We peaked out in S&P earnings in the fourth quarter of 2018, and now we're down in the low single digits. So we already have a lot of issues. The Federal Reserve is actually talking about decreasing interest rates as opposed to increasing interest rates. So all these things put together really means that we're probably not on very good footing. So if you want to reach out to me, give me a call. I'd love to sit down and chat with you. It's David Reyes.